Here's what's coming up on Retirement Planning Made Easy.
In past years, those tax rates have gotten much higher than where they're at right now. So right now is a great time to look at conversions and take advantage of these lower interest rates now, because there's a great possibility that those rates could rise in the near future.
That's the number one misconception we run into with people, is they think if they are in the 22% bracket, then they are paying tax at 22%. And that's not the case. Why that's important is because it plays into what we call tax efficiency planning.
What we're here to do is take where you are right now and make it better.
And maximize it, optimize it, absolutely.
You get to deliver arguably some of the best news in somebody's life, that they get to retire, they get to quit working. And I mean, hopefully they don't dislike their job too much, but that happens. And I mean, then it's even better in a way, because it's like, guess what? You get to stop.
Or you can fire your boss.
That's true.
And now, the host of Retirement Planning Made Easy.
Welcome to this week's show.
We've got 30 minutes of great information planned up just for you.
And the show starts right now.
Today on the Roundtable, we're talking about financial planning for all stages of life. Why start financial planning early, Lucas?
Starting early really allows you to maximize what the markets could do over a long period of time. You're able to maximize some of that compound growth and interest. We have tons of different accounts that you could start for a baby, an infant, kids getting that they're going to school, college plans. If a new person is working at a company that offers a retirement plan, take advantage of these, because the earlier you start, you're going to be able to really maximize that growth over the long term.
I'm kicking myself in the butt right now, okay, because I think I started, and I won't get into my complete story here, but my first 401k started paying in my 20s. And when I left, what did I do?
Cashed it
I
out.
cashed out, took the tax thing, took that money. If only, I don't even want to know what it would be worth today. I don't even want to know.
Yeah.
But I think this is really important. It's never too early to get the planning started, and maybe never too late. It's better than not planning at all. Brian, how do financial needs change over time for people?
Well, in your, first starting your first job, for example, and that might be where you start accumulating first. Say it's even before you would be married or something. That can be a great time to be putting some money away. Start a Roth IRA, because you've got compounding over all that time. Once you're married, now it might become more of an issue to still do some savings and so on through your company plans, as well as Roth contributions and so on. But it might be something now you need protection in the form of some life insurance, disability insurance, things that are going to protect your family throughout that time. Then as you continue to go out through your lifetime and you get raises and so on, make sure you pay yourself some of that money through the issue of contributions into retirement plans, as well as into other areas of your life.
Do you have younger folks that come in? And I know you're more in the retirement specialty line, right? We're really 10 years out of retirement's kind of the sweet spot for you guys. But do you get younger people that come in that say, hey, I'm interested, I've heard great news about your firm, and how can I get started?
Yeah, we do have a lot of younger people come in. Majority of them are referred by our clients that are with us, mothers, fathers, grandfathers, grandmothers. So therefore we do end up and we help them get started in life.
Yeah, so I think it's important right now to bring up one of the differentiators with you guys, and it's your proprietary process top. So does it matter what stage of life you are to take advantage of this proprietary process?
No, not at all. Our tag optimization process, we do hit a lot of great areas, but there's no age minimum or anything like that. I mean, everything that we do in our office can be applied to any age of client.
Some might be more important, or more pertinent, let's say,
right,
at a given age group, but they're all important. And the sooner you would start working on that holistic approach, the better off you would be.
Thanks, Brian. Lucas, so when did we really start focusing on true retirement, like I'm not going to work anymore. We all look forward to that. If we're prior to that point, what am I thinking about? What should I be asking? What type of questions?
Sure. You know, everybody's situation is different, so there's no set age for somebody to start planning for retirement. But right around age 50, is a great idea to start getting a plan in place. As we know, 59 and a half is that golden age where we can start to take money from our retirement accounts. So having that 10-year, buffer there will give you a great amount of time to start maybe changing your risk strategies, getting a plan in place for income, healthcare planning, things like that. So by the time we are to age 59 and a half, 60, right around there, you're going to have a clear roadmap that you can follow because of all the planning that we've just done over the last 10 years.
Brian, I'm reminded of an article I read years ago that the gentleman who put this together, and it was talking about planning, he said a lot of consumers today that they're going in for the first time, so maybe they're 47, 48, 49, 50, 51, 52, that they feel that it's a lot like going to the doctor's office and the doctor says, okay, remove all of your clothing and put on this skimpy little gown, right? Because you have to go in and you've got to tell them all of the things that you potentially did right and you potentially did wrong. And there's this fear of judgment. Like, you're going to shake your finger. I know you. You guys are not the shake your finger kind of people, but hey, let's get to the essence of the solution for this, regardless of what you did or you didn't do, so that we can move forward on this. Don't wait, I guess is what I'm getting at, because you think that meeting with someone for the first time, let's say you're in your mid-late 40s, early 50s, now is the time to get that going. Yes?
Yes. Sooner the better to start. We don't judge people. In fact, that's one of the things when a younger person comes in, I say to them, we're not here to judge you. And that would be true of anybody that comes in. Because every once in a while we'll get somebody that'll say to us, well, I'm a little embarrassed because, they might be 55 years old and they say, I'm a little embarrassed because I haven't saved as much as I, think I probably should have. Okay? And I always comment to them to say, that's not what we're here to do. What we're here to do is take where you are right now and make it better.
And maximize it, optimize it, absolutely. Lucas, Brian, thank you so much. If you want more information about this topic or anything we spoke about here today, hey, pick up that phone and give us a call. We'd love to start a conversation with you. And don't go anywhere. We'll be right back.
You're watching Retirement Planning Made Easy.
Now more than ever, it's vitally important to review your current retirement plan and get an educated second opinion. Hi, I'm Lucas Dengler, and for many American retirees and pre-retirees, this is a confusing time. As a local business here in the Quad Cities for over 30 years, we have educated thousands of families on how to retire well through all market conditions. Call now or scan the QR code on the screen to schedule your complimentary consultation. The Advisory Group, providing financial peace of mind since 1991.
Welcome to Mastering Retirement with TAG. This is our educational segment and one of our most favorite segments because we get to pick a topic and we get to educate you on that topic, which is what we do every day. It's what we love to do. Today we're going to talk about tax brackets and tax rates. And I know some of you are probably thinking I'm about to fall asleep with this, but I promise you this is important information that you need to know. So what I have here is our current federal tax bracket system, or marginal tax rates. And you can see they range from 10% to 37%, and then I'm showing single and married filing jointly. Why this is so important is because this chart is how you determine what rate of tax you are paying. And I don't think there's anything we talk to clients about that they get wrong more often than this. And it's not their fault. It's because it's an intentionally confusing system. And it is changing constantly. So it's hard for even us to keep up with. But let me explain it to you and see if I can have you get a better idea of how it works. So the brackets start down here and go up to here. Your income, I'm going to focus on married because that's the most common scenario we run into. Your income starts at the bottom and you work your way up. So every single person, their first $23,850 is taxed at 10%. Even Warren Buffett and Bill Gates, they pay 10% on that first $23,850 of income. They go through it in a millisecond, but they pay it. As you work your way up, you go into different tax brackets, but that first earlier amount of money is only taxed at that rate until you get into the next bracket. So your effective rate of tax, the amount of tax you're actually paying, is probably less than your bracket. That's the number one misconception we run into with people, is they think if they are in the 22% bracket, then they are paying tax at 22%. And that's not the case. Why that's important is because it plays into what we call tax efficiency planning. So if your tax rate is X%, you should be thinking, is that less than what I will pay in the future or more? And if you think it's less, then you should do something about it. Now, why would you think it might be less? Well, you may have heard of the national deficit, or in other words, the debt our country carries. Because of that debt, we believe that tax rates may raise in the future. So even if your income remains consistent throughout your whole life, it's likely that your tax rate will raise at some point. If your tax rate is higher in the future, then you should be taking advantage of the tax rates you are experiencing now while they're on sale, which is the phrase we like to use. Taxes are on sale. Because these rates you see here are historically low. You're paying less tax now than almost any other time in history, in most cases. And so what that means is you can utilize that small tax rate now and get your money out of the pre-tax buckets, or your 401ks and your IRAs, get it out of there and out of future taxation at higher rates, reposition it in a tax-free bucket, and be better off in the future. But that's something you have to look at with an advisor, something we have to help you plan for. It's an extremely complicated process, but it's important because saving on tax is probably one of the biggest savings you're gonna see in your lifetime. As if tax rates do raise, the savings can be significant. So it's very important that you include tax efficient planning in your entire spectrum of your retirement life. That's why it's one of our main pillars of what we call our TOP program, or our TAG optimization program. Tax efficiency planning is one of the main things that we focus on because it goes hand in hand with retirement planning and income planning and even healthcare planning to an extent. It all meshes together and creates a big picture that enhances your retirement life. So it's very important that you know your tax rate and the best way to utilize that tax rate. If you like what you heard today and want to learn more, please give us a call or go to our website.
You're watching Retirement Planning Made Easy.
We can talk all day about Social Security, taxes, healthcare, income, and risk. But the truth is, your financial journey is unlike anyone else's. Hi, I'm Brian Nauman with the Advisor Group. Even a small difference like your age, assets, risk tolerance, or longevity can mean a big shift in your retirement strategy. That's why we created our customized TOP program. It focuses on the 6 most important issues that can help you make the most of every dollar you've saved for retirement. With over 30 years experience, we've developed a holistic, personalized approach to financial planning that puts you first. Please don't leave your financial future to chance. Call today or scan the QR code on your screen to schedule your complimentary consultation. The Advisor Group, providing financial peace of mind since 1991.
Hi, and welcome to this week's Retirement True or False. Brian, Lucas, we ready?
We're ready.
All right, here we go. Lucas, first question for you. Converting to a Roth IRA only makes sense for high-income individuals, true or false?
That's going to be false, Mark. We see Roth conversions as a great tool for anyone, really, if it will allow for it. Now, it depends on the person's situation, so it might not be perfect for everyone, and that's what we help look at with clients. But Roth conversions are huge. It could be a game changer. One, you're not bound by taking those required minimum distributions. You can continue to let those accounts grow. Tax-free income in the future is great. So it's not just for the wealthy individuals. We would help anybody sit down and look and see if it's right for them.
And we would say that my take on that is to look at it to say you should look at it.
Yeah.
We can't tell you without going through it whether or not it's appropriate for you, but for the majority of people, there is a sweet spot. The sweet spot meaning how much in that current tax law, the tax rates, could you have? How much below before you fulfill that tax rate, for example? So by doing that planning, we can help determine with them if it's appropriate and prudent for them to do.
You know, Lucas, I think it's really important when we talk about Roth because we can say percentage, we can say words, but at the end of the day, when you create this tax-free income for your clients, we're talking about a good chunk of money that's coming in tax-free.
Oh, yeah.
Right? This
Yeah.
isn't like a couple extra bucks a month. This could be a significant part of your income tax-free every month. And just like you said, Brian, why wouldn't you check it out?
Right.
Why wouldn't you hear the numbers to say, hey, that works well for us, or that's just simply not going to work? And then I'll go one step further, Lucas. Are we in a good tax environment right now to see whether or not a Roth could be a good idea?
You know, it depends on how you look at it. Some would say no. Others would say yes. Now is a great time to look at it because in past years, those tax rates have gotten much higher than where they're at right now. So right now is a great time to look at conversions and take advantage of these lower interest rates now because there's a great possibility that those rates could rise in the near future.
Brian, next question for you. Most retirees don't need to consider healthcare costs in their retirement plan. True or false?
False. That could be one of the biggest areas that is overlooked for most retirees because it could be the largest amount of money they have to pay out throughout retirement. How much they need in income could be nothing in comparison to that. So when you're looking at the situation, and we want to make sure they don't overlook the issue of potential health care costs going throughout their retirement. And it's not just the cost of health care. It also goes back to the tax efficiency, the cost of what it might be for the hidden taxes or the taxes that you don't even think about, like the Medicare Part B and the surcharge. Things like that add into the healthcare arena of costs.
You know, in previous shows, we've talked about how a stock market correction could really hurt, right? It could really take a chunk out if you're not planned properly. But my goodness, Brian, if you don't do your health care correctly, and that could be devastating to a couple or an individual as far as their portfolio is concerned. Fair statement?
Yeah, and I'll add on one more thing to that. Think about it for the spouse that maybe is at home that isn't getting care. Let's say one spouse needs care and it's $10,000 a month, $5,000 a month, doesn't matter the number, but the idea would be is think of their other spouses at home, but now that money is going to care. So that could devastate, not only be a bad issue or a bad thing to happen for the couple in general, but what about the one that's still home with most of the same expenses?
Yeah. That just goes to show it's all about the planning. And just to reiterate, not all advisors take the healthcare piece into account. Not the best topic to talk about, not the most pleasant topic, but it's a need to be talked about topic. Lucas, last question for you. There is no difference between traditional IRAs and Roth IRAs, true or false?
It's going to be false, Mark. Both account types have their advantages, but they are also very different at the same time. With traditional IRAs, that is all pre-taxed money. Now, you do get to write that off on your taxes, your contributions, but as it grows, you're going to have that tax deferral. But at the time you go to withdraw that money, you're paying tax on the entire withdrawal amount. So the Roth IRA, on the other hand, is, you're putting after-tax dollars in. And the great thing about that is as it grows, it's growing tax-free. And the biggest benefit of the Roth IRA is when you go to withdraw that money, that's all tax-free income.
Love those words.
Not to
tax-free income.
Not to mention the required minimum distributions, the forced issue of
Beautiful.
distributions in the future at retirement versus a Roth doesn't have required minimum distributions.
Is it fair to say it's all about the planning?
It's all about the planning.
A basket of accounts is not a plan.
Yeah.
It is just a basket of accounts.
Yeah, we sit down and we look at the overall picture. We help people decide, is a Roth conversion good for them? How do they get more money in Roth assets? So yes, there could be tons of accounts out there, but it's how they fit together and work with your overall plan.
And it might be part of wealth management planning where you're doing it for legacy purposes too.
Yeah.
Brian, Lucas, thanks so much. If there's anything here we spoke about today that's of interest to you, pick up that phone right now and give us a call. We would love to start a conversation with you. And don't go anywhere. We'll be right back.
You're watching Retirement Planning Made Easy.
At the Advisory Group, we understand the importance of smart tax planning. Maximize your returns and minimize your stress with our unique tax efficiency strategies. Don't let taxes weigh you down. Keep more of your hard-earned money. Call the Advisory Group today to experience the freedom of tax efficiency planning. Call now or scan the QR code on your screen to schedule your complimentary consultation. The Advisory Group, providing financial peace of mind since 1991.
Hi, and welcome to this week's Ask Tag, where you email your questions into us and we answer them right here on the show. Brad and Brian, I've got some great questions this week. Brad, I'll begin with you. Anna from Davenport writes, I'm 62 and plan to retire at 65. I have $1.2 million tied up in my 401k at work, $100,000 in the bank, and $700,000 in a brokerage managed account. Would you recommend seeing an advisor now or waiting until after I retire?
Well, Anna, congratulations. You've been a good saver. You got a good amount going there. It sounds like you might be heading towards retirement, which is great. Congratulations again. I would recommend that you see an advisor, though, because only they are going to be able to tell you truly, effectively whether you can retire. And it all depends on your personal situation. How much money do you need to live on? How long do you plan to live? All of those factors come in to play in this stage in your life. You've done a good job so far, but now it's probably time to bring an expert in and kind of look at your situation and figure out where you're at.
And one of the things I love that you specialize in at TAG is, everyone's going to go through their accumulation phase, and they're going to have, just like Anna's done, and Anna's done very, very well, right? And now this is a tricky time, right? Because you have all this money, it needs to last you the balance of your retirement. Mm-hmm. It requires you bring a different strategy to bear. Fair statement?
Definitely. Accumulation is very different from what we call distribution, which is the phase you are going into. Accumulation, you're just trying to grow the money. So you need to invest it prudently in order to grow it. But now all of these other factors come into play, like how do I withdraw the money? In what order do I withdraw the money from? And then you have things like Social Security and all of that adding into the picture and making it much more complicated than it was during the accumulation phase.
Another follow-up here. How nice is it, Brad, when you get to sit down with someone like an Anna and say, you know what? All the numbers work out. You can retire and retire well.
That is the best part of the job.
Yeah,
definitely.
That has to be the best part of the job.
You get to deliver arguably some of the best news in somebody's life, that they get to retire, they get to quit working. And hopefully they don't dislike their job too much, but that happens. And then it's even better in a way because it's like, guess what? You get to stop.
Or you can fire your boss.
That's true.
The other thing that comes into play with this that we see a lot, though, too, is the idea that a lot of times when they're looking at that, the majority of people we probably meet with know that they have the money to retire.
Yes.
They don't know what it means. In other words, how to connect it. A lot of times our planning goes beyond just having the money. It's what do you do with it from this point on.
Yeah.
So let's talk about that for a minute, because you have a unique proprietary process at TAG called TOP. Let's talk about that for a moment.
Okay, the TOP program stands for TAG Optimization Process. So what it does is it takes 6 essential areas of your financial life and helps you connect them in a way so that you know how each one is talking to each other. So you're not left with just a half a plan or part of a plan. And make sure we encompass everything within the area of your financial plan, and make sure that we go through that area, with our clients to help them understand each one of those.
Brian, I think this is really important because, as I like to say, not all advisors are created equal. Not all advisors are fiduciaries. Not all advisors do comprehensive retirement wealth planning. Can you break down those 6? I don't need you to do a long version, but what are those 6 areas inside of TOP that really make you guys different?
Well, I think a lot of them starts with the basic, and that's what a lot of people do is retirement planning, okay? I think a lot of people stop there, though. They don't go any further. A lot of advisors stop there and don't go any further. They might go to the investment planning, which is another one of the areas. So maybe it's retirement planning, investment planning. What we do, though, is make sure in retirement planning, investment planning is also talking to tax efficiency planning. It's also talking to wealth management. It's also talking to healthcare needs. So we take a lot of the different areas that are often overlooked and put it all together and connect those together from all the different ways and benefits and so on that make a difference in people throughout their retired life.
And I just want to follow up before we break in the segment here that it's so important for pre-retirees and retirees today to get a second opinion, right? You go to the doc, you hear some news, you get a second opinion. What's the worst that could happen, right? You just say, hey, John and Mary, guess what? Everything's perfect. Send them on their way. But if you happen to notice something that might be off about taxes or estate planning or Social Security or their income plan, right? You now, for our viewers at home, you have the opportunity to say, okay, I need to correct this or I'm not going to correct it. But that second opinion could be really powerful inside of your retirement.
Yeah, definitely.
Brad, Brian, thanks so much. If you want more information about anything we spoke about here today, hey, give us a call in the office. We'd love to start a conversation with you, or go to our website. But most importantly, don't go anywhere. We'll be right back.
You're watching Retirement Planning Made Easy.
We can talk all day about Social Security, taxes, healthcare, income, and risk. But the truth is, your financial journey is unlike anyone else's. Hi, I'm Brian Nauman with the Advisor Group. Even a small difference like your age, assets, risk tolerance, or longevity can mean a big shift in your retirement strategy. That's why we created our customized TOP program. It focuses on the 6 most important issues that can help you make the most of every dollar you've saved for retirement. With over 30 years experience, we've developed a holistic, personalized approach to financial planning that puts you first. Please don't leave your financial future to chance. Call today or scan the QR code on your screen to schedule your complimentary consultation. The Advisor Group, providing financial peace of mind since 1991.
You're watching Retirement Planning Made Easy.
Thanks for watching today's show.
And if you want more information about anything we spoke about here today, give us a call in the office or go to our website.
The Advisor Group, providing financial peace of mind since 1991.